Welcome to Tani's Tax Consulting YouTube broadcast channel. This is the first broadcast, and the intention here is to share our thoughts and issues that are troubling taxpayers. I'm Mr. Tani, the Managing Director of Tani's Tax Consulting Services Center in Berhad. We provide a full range of tax services, and we are a pure tax firm. Let me first kick off the first session. And the broadcast will be an issue that is actually simple but troubling many taxpayers is, do you or do you not prepare TP documentation? The answer actually lies in the transfer pricing guidelines that was just recently issued, an updated one on 24th of December last year, 2024. But before talking about the guidelines, let me talk about the law. The law is very clear when it comes to transfer pricing, and the rules are very clear. They make it clear that everyone who enters into a controlled transaction or a transaction with related parties or associated enterprises or intercompany transactions in simple terms, you must prepare TP documentation to justify your transactions, the controlled transactions meets the arm's length test. There comes an avenue. The transfer pricing guideline gives you, an opportunity to avoid preparing this TP documentation, and certain persons are exempted, and they are individuals not carrying on business. Individuals carrying on business, but they only carry out domestic transactions, no cross-border transactions, you're also exempted. And persons who enter into controlled transactions amongst one another, and it doesn't exceed 1 million, you don't need to prepare. If your controlled transactions in total don't exceed 1 million, you don't need to prepare TP documentation. And the last group would be, a person who has entered into domestic controlled transactions with another person, with a related party, associated enterprise, etc., where both parties are paying the same rate of tax. The headline tax must be the same, and they don't enjoy any tax incentives. You don't have to prepare TP documentation. And those who do not suffer losses for 2 consecutive years prior to the controlled transactions being initiated. So effectively, within the group, if you're only carrying out domestic transactions and both companies are actually paying taxes, and if there is any future adjustment by the tax authorities, there will be no additional tax as a sum total, then you don't have to prepare the TP documentation. The people who need to prepare, the taxpayers who need to prepare the TP documentation are those who generate business income, in excess annually of 30 million, and you have controlled transactions in excess of 10 million annually. Now, the issue is, the word is business income. The question that is unanswered is, what happens if you have passive income like rental income that is not carried on as a business, just as passive business? Is this business income? The answer would be probably no. You also fall out of it, because the words here are business income of 30 million. The second one is where, if you have controlled transactions and you provide financial assistance to one another, that is loans, advances, guarantees, and securities for related parties, and if that exceeds 50 million a year, then you must prepare TP documentation. There's a big however. There is actually a caveat here in paragraph 1.6 that says, even if you do not prepare TP documentation, you must be in a position to prove that all your controlled transactions meets the arm's length test. You must have the necessary documentation to prove that it meets the arm's length test. So effectively, they're asking you to prepare a simplified documentation or some form of documentation that you should keep, that you should be able to show that this transactions meets the arm's length test. What you should do in most cases is, even if you're not required to prepare TP documentation and you are a reasonably medium-sized or a large company, it will still be safe to prepare simplified documentation for the companies. Or the alternative is, you should prepare a one-off policy document whereby all your intercompany transactions are now supported with evidence, justified with the necessary comparability analysis, which is basically the heart of transfer pricing, comparability analysis, to prove that your interco transactions, when requested by the Inland Revenue at a future date, meets the arm's length test. This is what I'm going to present today, and in the future, there will be other sessions. We will talk about issues that are still of concern in the transfer pricing arena. We will provide you technical content and issues that are bugging many taxpayers. We will provide you clarity, and if there are issues, we will also highlight issues that are unresolved, and we will give you our thoughts on those issues. Please come in and follow our broadcast. So thank you very much, ladies and gentlemen.